He doesn't need to drink the coffee.
I like to
but
drink
he drinks
coffee.
Welcome to Fin Tips, everybody. It's Friday. How you doing? A little different something going on. We're going to test it out.
We're working on it.
We're going to test it out. Yeah. Today we're talking about, the recession.
Oh, the recession.
It's happening, right?
Is it? You said that there's 100% chance on a video that it's going to happen.
Yeah, I don't know. Definitely, I think most of us have accepted the idea of a recession, but how bad will it be? Do you think this one will be worse or better, or what would you like to say?
I think it'll be different.
That's a politician answer right there. And I caught myself. You see what happened? I'm being more mindful. I know you don't like my jokes.
Yeah, don't go with the NSFW.
I don't even know what that means.
Not suitable for work or something like that. I think, I've always seen. I think that's what it means.
That's what it said on when I got written up by HR.
HR wrote you up.
Yeah, got in trouble by HR for that joke. Yeah, hands down. It's a recession. It's going to be. The yield curve is more inverted than any time in my entire lifespan.
Yeah.
You have to go back to a year before I was actually born before having a yield curve that is more inverted than it is now.
Year before you were born.
Year before. What year was that? 81. Time's up.
Thank you.
I was born in 82.
Yeah, 81 was the highest yield curve. So that's interesting that you bring this point.
Okay.
Because the 80s was the moment where, we had this really high inflation.
Greed is good, baby.
The government, Fed tries to raise rates. They push us down. Then they have a recession. And I'll show you, actually. I'll show you a chart right here.
Please share the
right
chart.
Here. Let me show you my chart.
That's a beautiful chart.
So the idea is, the government has the recession in 80.
Yep.
And has another recession in 82 because they did the whole raise the interest rates and then raise them again. And, hey, this time we're really going to do it for real this time. So is that going to happen this go round?
Well,
Mr. Soft Landing? Please,
and I'm going to make my case for a soft landing, and I'm going to show you it's crystal clear, soft landing. I mean, your bet is so far off. But a recession and a bear market, two different things.
Yes.
Right? So what you could see on his chart is the markets always bounce during a recession, period. There's no question about it. And although they may pull back, recessions and bear markets are different. So example, on my chart here, what I've done is I've overlaid every single bear market as far back as I can go, post World War II. I couldn't grab anything before 1945. And so what you can actually look at, you see 1980s in green, there's your pullback inside of that bear market until it hit its bottom. Do you see a 1982 in there? No bear market in 1982. So recession, bear market, two totally different things. That's what I want to point out. Now in red, I just want to show this is where we currently stand, minus a little bit of a bounce. I don't know why that didn't post in there, but we got a little bit of a bounce right in here, as you know. This is that 2022 pullback. Could we still be due for more, right? That's the length of time down here that we have versus the amount of the pullback. And I don't know. I do want to point this out real quick. 2007 and 2000, these were, in 1973, these were meaningful, very much outside of the normal market movement justifications for a pullback. Housing crisis, .com bust, right?
Yep.
And then, of course, there's 2020, which was COVID. But notice where we stand. So if you look at any other bear market in there, we're basically trending as we should right now, given the fact that we're likely going to be in a recession.
Yeah. No, I think that's exactly what I was looking at, too, and kind of a valid point on everything that you just said, because the general markets, there were reasons for, 2000, 2008, 2020 outside of just an economic, just cycle. Instead, it was the bust. And looking at that, 2000, it's interesting to see, though, because right here you're seeing this S&P 500, 2000, the dot-com bubble, everything just continuously had a downtrend. 2008 continuously had a downtrend, then starts that recovery, just as you'd kind of mentioned, same here. But then the big thing with 2008 that I'm looking at, though, and what people aren't really thinking through on this is that that's their most fresh thing in their memory.
Oh, yeah.
Outside of 2022. It's like, oh, man, this is '08. This is '08 all over again. '08 was totally different because it was the housing market crisis. There was all of these junk, mortgages that were sold, had different interest rates that were inflated on people. That's not going on. We actually have a really great client who helped inform me on this. I'd mentioned him before, because of the fact that, it's not the same mortgages. He's actually follows all this. He tracks this. He helps people get the mortgages. And so he helped inform me on why it's not 2008, because I actually made a video on it one time on talking about some things that were coming out. Some of the mortgage lenders were doing that were a little different. I compared it to 2008, but I was staying corrected on that. I'm not scared to admit my wrongs on something. So
It's a big man right there.
So just looking at this, though, you've got to realize it's not what we thought, what we remember in 2008. It's not what we remember in 2020 even. 2020, definitely not, because that was, the V-curve recovery. So this is something that we're looking at that's completely different than what we had.
Markets don't have to crash either. Like in the form of their normal cycle from expansion to contraction, we don't have to expand, crash, expand, crash.
Yeah.
That's just what we lived through like the last couple of times, 2007, of course, 2020, and then 2000. So a lot of us that are of this age are like, well, yeah, we did see that. I will argue that we are end of cycle, or nearing end of cycle here, but we have a perfect environment for just a normal contraction that really doesn't hurt the markets all that much. Mm-hmm. And so this came up this week on Jerome Powell testifying in front of Congress.
Uncle Powell.
And they just grilled him. They're like, if unemployment goes up, you're firing 1 million people. Are you saying you want that? And I wanted him so badly to go, you guys spent the money. I'm just trying to tighten things up. But he was a man. He held it together. Here's why he's right and why we can do this. Job openings. We're still near historic highs. I'm going to show this chart here.
Okay.
11 million job openings. That is way beyond the average there. We can have an economy contract just by simply having less jobs to be offered there. And if we go a step further, unemployment can tick up. The average unemployment over the lifespan of the history that we can track this, 5.7%. So part of unemployment is so low right now because there's so many jobs offered. If we reduce the number of jobs offered by, of course, slowing the economy down, unemployment ticks up. It's not ticking up because people got fired. It's ticking up because the people that want to find work are finding less jobs. So right now unemployment's really low because the people that normally get counted as looking for work, they call them given up. So they say that there's a whole bunch of people that have just given up looking for work. Well, if there's 11 million jobs and you've given up looking for work, it's because you have so much money, you're just fine. I don't want to look for work.
Yeah.
So by the job openings coming down, unemployment can go up. That's not firing 1 million people. That killed me with Elizabeth Warren yesterday. She grilled him on that. You're going to literally fire 1 million people. What would you say to those 1 million people? And he's like, we're not trying to fire people. And it was perfect. He nailed it the way he said it there. Moving on real quick. Unemployment, the average hourly earnings, right? So average hourly earnings, the growth of your average hourly earnings just freaking skyrocketed there. What the Fed has been clear about is we want to slow that. We want you to earn more, but we want you to earn more a little bit slower because y'all are spending money like crazy. That's working. Look, they got 2.96 as the average there. We're at 4.43. It's starting to pull back. Yeah. So the idea of how do we have a crash inside of this? We can't. We have too many variables that are super, super strong that can afford to contract. Sorry, I ranted.
May I see your pockets? You have a check from Jerome Powell, pad in your pockets, saying, "Oh, it's going to be a soft landing."
I'm not saying I wouldn't.
Jerome over here.
I'm not saying I wouldn't take it. But
no, I do love that explanation, and I think that it's a great explanation. First of all, with just the fact that, in a sense, then you're saying, the jobs report's almost skewed because, people are looking at the unemployment number, but instead we need to be looking at the number of opening jobs because, we just reduce the amount of open jobs. People still have opportunity.
Yeah, and
there's still opportunity for jobs.
Well, one thing I could have shown too is the amount of people that have given up work. So you have M1 through M6 is how they do the unemployment. They just change the way how they calculate that. So the amount of people looking for work will go up as job openings go down and the economy softens a little bit because they won't have all this money stuck in their pocket. That's a good thing. That'll keep unemployment low or at least within a 1% range.
Yeah. No, I could see what you're saying there. What you got?
I want to throw one more thing in there.
Throw it at me.
Average hourly earnings growth. Why do we look at that? and you say, well, what's the Fed have to do with, why are they telling me how much my earnings can grow? Because in order to get back to 2% inflation, if you're looking at the screen there, we have to have our average hourly earnings growth below average. You can't have inflation at the target that they want, which is 2%, with average hourly earnings growth being 3 and 4.5%. So that's why that's so important. They're not telling you they want you to make less money. They're saying, we know the stats. We can't have lower inflation if the growth of your earnings is just off the charts.
Yeah, and all the companies, how many people are out there got the big raise because we're going into 2022? They got the big raise because it's like, hey, inflation was really high,
and
we're going to give you the big raise.
Other companies, if you don't pay me, somebody else will.
Yeah, Social Security, things like that. And so yeah, there's a lot of that comes into play there. I think that there's the slight, we've kind of went through this before, but there's the possibility that, does the Fed go too far? It's that ripple effect. Now, we can't truly see into the future on how that would look, but the fact that
I can soft landing.
Okay, all right. You say soft. I'm going hard landing here still.
They got this.
Though, just what you say though. Overall, yes, it pushes us into a recession, but the markets don't always correlate with what is going on as far as a recession goes. We do see different times here where the markets do fall during the recession, but there's always the recovery. This is the weird one because the markets have already fallen a lot compared to where we were. So I hope for everybody's sake we go with that soft landing.
Well,
I really do, and I think you've made the best argument today on that. I'll give you.
Thank you. I've got one more argument.
I'll pass it to HR to let you know. Hey, let him slide on. His NSFW jokes.
I don't know. Maybe I come up with something today. I don't know.
Oh gosh.
The other part of it is you have companies that are already saying we see what the Fed is doing, and therefore we're going to tighten up. So on the screen, you've got UPS, JP Morgan, Tesla, McDonald's, Bank of America, and Citigroup with literally their words of how they're tightening up. I did a video on this, but you have UPS saying we expect a mild recession in the first half of the year. Therefore, we're going to prepare for that. JP Morgan, Tesla, Elon Musk maybe didn't use the most eloquent words.
Very, very vocal about it. But yeah, absolutely. Jamie Dimon with JP Morgan, CEO there, been very vocal about some things there.
McDonald's, our base case is for a mild to moderate recession in the U.S. Do you think that they say that and then they just don't do anything about it? So when you have big names like that saying we're just not going to hire, we're going to reduce the number of job openings, we're not going to pay as much as fast, that slows everything down. That's a recession.
There you go.
Eventually.
There you go. So it's different. It's different than the last one.
It's different because it's not going to be as bad.
Well, and you look at 2020, the jobs reports, everybody was out of a job, but it was because they completely shut things down. That was totally different. But then in 2008, the unemployment, can I get the words right?
Yeah, so, please.
Maybe I drink real coffee. Had to prove it.
Now he's shaking.
Really crazy. No, so unemployment, as far as everything goes, it was much higher at that point. Like you say, you didn't have the jobs in general. So it wasn't just the unemployment. It was also the jobs weren't there and the unemployment was up.
Which now you guys can see on those beautiful charts that I shared with you.
Well, maybe, if people just go back to work. Like you say, there's so many people that aren't working. What's the deal? Where's the money? Where's the money is what I want to know.
You ain't got no money?
Well, I want to know where the money. I don't have enough to quit.
I didn't get the money from the government. So when they were throwing it out of helicopters, I was like, shoot, man, this is crazy. That money's got to go somewhere.
Yeah. Let me ask you, what type of music do chiropractors listen to?
I like that you're going with a doctor joke here. Go, hit me.
Hip hop.
Yeah, hip hop.
There we go.
That's perfect. Because what do deaf gynecologists do? You went with the doctor joke. So
they do the same thing because they still do their job.
Hey, look at Eric. He's like, why don't they
Where
do
are we going?
Hey, enjoy your weekend, everybody, and we'll see you next time.
All
Thanks
right.
for watching.